Hello everyone and welcome to Finance Friday. The answer to the question as to whether all banks are the same is a resounding no. Even within the big four banks there is some differences of approach. These can be subtle differences and some not so. These differences can be driven by a number of things such as a particular bank's expertise with a certain type of borrower or industry. Now, this is particularly the case with commercial funding. Other differences of approach can be driven by a bank's exposure or market share to a certain type of borrower or industry. If a bank's market share to a certain type of borrower or industry is too high for their liking, they may limit the amount of new approvals by way of tightening the conditions that an applicant may need to meet. On the flip side, if their market share or exposure is less than they desire, they may actually come out and be more aggressive. Now, this may be by way of lower interest rates or even lessening the number of conditions that applicants need to meet. The biggest differences we've seen, however, particularly over the last 5 or 6 years, has been the emergence of niche lenders or specialised lenders. Now, these lenders target the borrowers that the large banks tend to neglect. Now, these niches may include lending money to people with debts to the tax office, which is a huge no-no with the major lenders. But it can also include lending money to people with past credit issues or defaults. With so many lenders to choose from, this is why it's critical that you choose the right lender for your own circumstances. Not only will this make your own experience better, but it'll help ensure that the results that are provided to you are the most appropriate for your own circumstances. So I hope you found that of benefit, and until our next edition of Finance Friday, have a great week.